Hello and welcome to my YouTube channel. My name is Kenneth, and if you're interested in learning how to invest in the stock market, this video is for you. This is a total beginner's guide taking my 5 most popular TikTok videos on how to get started as a new investor, and I'm putting it all in one very brief YouTube video. And what can you expect from these 5 videos? How to open a brokerage account, how to enroll into DRIP or dividend reinvestment, how to invest $10,000. It's just one of many examples. What is the Dow Jones? What is the S&P 500? And finally, how to open a Roth IRA, which if you're saving for your retirement is very important. So with all of that being said, please subscribe, please hit the alerts thing so you get alerts when I make new videos, and thanks for watching. If you're new to investing, this is your step-by-step guide on how to get started. My name is Kenneth, and I've been investing for over 20 years and trading stocks for 13 years, and I'm totally self-taught. Step 1, most important, smash the follow. First thing you're going to do is go to TD Ameritrade and open a new account. If you're in your early 20s and you're saving for retirement, you're going to open a Roth IRA. Pause the screen to read what a Roth IRA is, but keep in mind the max contribution is $6,500 per year. And one of the most common mistakes I see new investors make is they think the Roth IRA is the investment, but it isn't. It's just the account. So you need to put money into the account and then buy investments. But what do you buy? All new investors should consider an S&P 500 index fund. SPLG is the one that I own. You can add more investments later. Under products and services, you have to click dividend reinvestment. If you contribute the max for 30 years, you'll have almost $860,000. What is a Roth IRA? Roth IRA is an individual retirement account. That means it's for your retirement. Max contribution per year is now $6,500. The money is taxed when you put it in the account, not when you withdraw it when you retire. All those gains are tax-free in retirement. If you make more than $144,000 if you're single, or $214,000 if you're married, you can't contribute to a Roth IRA. In order to have a Roth IRA, you need a job. You need earned income. Unfortunately for me, over the last 13 years, because I was a self-employed stock trader, that counts as unearned income. So I couldn't have one. But now that I'm getting those brand deals, I got one. Dividends are not taxed within a Roth IRA, and you can withdraw your contributions, but not your profits until you're 59 and a half. Most importantly, the account is not the investment. You buy stocks to put into it, and ETFs or crypto. Follow for more. You might often hear people talking about the Dow Jones and the S&P 500, but what are they? Dow Jones and the S&P 500 are indexes, unlike the NASDAQ and the New York Stock Exchange, which are exchanges. Dow Jones tracks blue chip companies, 30 to be exact. And many of these companies have a proven track record of strong earnings for a very long time. And you might recognize a lot of these companies. Dow Jones is price weighted. You add up the stock price of all 30 companies, and normally you would divide it by 30. But when you do this, you don't factor in for things like splits and dividends. So they created something called a Dow divisor. This is the number down here, and that kind of smooths it all out. Because it's price weighted and only looks at 30 companies, people say that it's not an accurate representation of the economy or the markets. That's why you have the S&P 500. This is comprised of 505 large companies. Because it's 500, it's very diverse. I'm almost out of time, so I'm putting text here for you to read. And the S&P 500 can be rebalanced if companies can fail to meet these requirements. Follow for more. If you invest in ETFs, watch this video. ETFs charge fees. Passively managed funds that track the S&P 500 charge very low fees. You can see it right there. Actively managed funds charge higher fees. Someone is actively managing this fund. So if you put in $10,000 in an index fund and they charge 0.10%, you're paying $10 in fees. But if they charge 0.75% and you're putting in $10,000, you're paying $75 in fees. The performance of the investment is not affected by the expense ratio. Your return is. These numbers might not seem like a lot. Imagine one day you have millions of dollars in your portfolio, and your fees are going to be pretty high. Don't worry, you're not getting a bill. The fees are just deducted from the investment's returns. Hit that follow. I made over $1,700 from my Ford dividend in March. And as you can see from the video, I used all of those dividends to reinvest that money back into the stock using something called DRIP. And when I say DRIP, I'm not talking about fashion, I'm talking about dividend reinvestment plan. And here's how you set it up. Under My Account on your TD Ameritrade account, you go to Dividend Reinvestment. It takes you to this page where you click on Enroll and Edit. The Wi-Fi is really bad, I'm on vacation. Then you'll hit Edit Enrollments. And it'll give you an option right here to enroll all of your dividend-paying stocks into DRIP. or you can pick and choose. Once you've done all that, you hit save, and then every time you get a dividend, you will end up buying more shares. And for everyone wondering why there are 2 dividends from Ford, it's because this big one here was a special one-time dividend. Typically, special dividends don't allow you to reinvest through DRIP, so I had to buy those myself down there. But special dividends can be kind of rare. Don't forget to smash that follow. If you're new to investing and you want to learn how to invest $10,000, this is the video for you. And please hit the follow and the save, it really helps me. The great thing about this video is whether you have 10,000, 100,000, or 1,000, it's very easy to change the numbers. Most financial advisors recommend that your largest position also be your safest, and that happens to be an S&P 500 index fund. Here are 3 examples. You only need one. It has an average rate of return of 10%, maybe a little less, around 8% if you're factoring in inflation. If you've got $10,000 and you're investing 40%, around $4,000. The next level should be, I almost dropped this. Try it again. Dividend ETFs and stocks. On the top, we have a list of dividend-paying ETFs and some very high-quality individual stocks. And on the bottom, we have something called covered call ETFs. I have an entire playlist on them. They come with a little bit more risk. $10,000, 30%, $3,000. We're getting kind of close to the top now. The third level of your foundation should be growth stocks or ETFs. On the top, I picked 2 index funds. One is tech, the other is semiconductors, just as an example, and then some individual stocks. $10,000, 20%, $2,000. And by the way, before we get to the last level, if you are a younger investor, you might want to opt to rotate these top 2 percentages. So 20% in dividends and 30% in growth. That's a personal choice. And finally, the last level would be speculative stocks, around 10% or $1,000. And that 10% is the max. You might want to only do 5%. It just depends on how much risk you want in your portfolio.